Hello everyone, this is Teddy Keckstead from Forex Trading Unlocked, and we are here on May 3rd for a Forex market analysis for the week of May 3rd through the 7th. And now let's go to our disclaimer real quick to remind you that this video is for illustrative and educational purposes only. And also, if you have not done so already, please subscribe to our YouTube channel, Forex Trading Unlocked, and also check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. So without any further ado, let's get to our live action screen here at the Forex-Trading-Unlocked.com website. From our navigation bar, we already pulled up our workstation page. And we have a bunch of numbers, obviously, that are coming out today, and also this week, actually, we have some big numbers to look out for. What I want to really get to is to show you these. So we're going to get down to, we got durable goods coming up this week, factory orders, those are big for the US dollar. Then we also have, let's get down to here, we have PPI for the EU, that's a big one. Then we have the national employment on Thursday, that's a big number. We have ISM also coming up. These are all currency numbers, they're interest rate numbers, so no matter what, should we get a move, especially like in the interest rate market, we will definitely see a move in the currency market. Consumer goods for the euro also, which is a Germany, but that's going to be influencing the euro. Retail sales also for the euro. We do have a Bank of England meeting also coming up this week. Are they going to do anything special? Probably not. And then we also have our initial jobless claims that come out this week as well for the US dollar. We have some inflation numbers coming out for the Australian dollar, which actually are kind of big as far as commodity pricing. Then we have also not retail sales. Where am I going to? We have a little bit further here. We have unemployment for the Canadian dollar, and then we also have the big number of the week right here, the unemployment rate for the United States. This is a big deal right now. So our unemployment rate is still at 6.7%, actually probably higher than that. This is definitely an understated number. The forecast is for us to get down to 5.8%. That is very unlikely. I would be very shocked if we do. So I think the initial phases of hiring for the summer and stuff like that, we've seen these numbers, or maybe we see this one more, but then this is going to be the plateau for a while. All right, so the dollar index ended last week with a big move to the upside. This 3-day pattern here is actually a high probable Japanese candlestick pattern. If you want to learn more about it, you can read the book, High Probable Japanese Candlestick Patterns, that we mentioned at the beginning of the video. By the way, I am the one who also wrote the book also, so if you want to see what I wrote about and learn how to use these signals in your trading, then read the book. So, all right, here's what we're looking at. The dollar exploded to the upside on Friday. This was a big, I think, profit-taking reaction as the market bottomed, is setting a short-term low for the next couple of weeks. Who knows, but right now I think it definitely is setting a short-term little bounce point for us to look at. So let's just say that it is, and this signal is valid for at least, let's say, a week or two. Where are we looking to get to? Well, our old 50% line right here, and we'll go to our 0.618 right here on the fib. So for the dollar index, this is the area that we're looking to bounce back into. Today there's definitely a little bit of a retreat. I think that's a profit-taking move against the dollar because of the extreme action that we've seen. Now let's go and take a look at what is going on around the world. So the euro-US dollar, obviously one of the biggest components in the dollar index. You can see it's an inverse relationship of the dollar chart almost. And today it is bouncing back. So does this mean that the dollar just had a big rally on Friday and that's it? Could be. I think it's a mixed bag of goods. It was overdone, the stretch on the dollar to begin with, so the sell-off was necessary. And there's a bunch of factors that could lead to help to drive the dollar stronger once again. So the key things right now, especially when we have the unemployment rate number like we're coming up, remember your 30-year bond futures. That's something to watch right here. So they ended the week kind of mixed last week. And the key is, will they make a breakout to the upside or a breakout to the downside? If they continue to make, and here they are coming off of, we had a higher move high, a higher move low, a lower move high, and a lower move low. So this situation here is definitely neutral at best. It is not bullish. Should we get a big rally in the 30-year, that would be negative the dollar. As far as oil, we have oil, which is higher on the day. Now there's a lag here. These are because it's futures. We can't have this in real time like we do the currencies. So, but oil is trading a little bit higher right now. I think it's just below $65 a barrel. And this is flirting with an upside breakout, and also is targeting around $75 a barrel. At least that's on our radar. So for the euro US dollar right now, let's see what we have here as far as a short-term retracement point. We just rely on our 50% rule. It's not a big sell-off that we're looking for, but we are looking for the dollar to gain some momentum back to strength against most of the major currencies sometime over the course of this week, and come down to make a test of this $19.22. This would be a good bounce point to correct back to, and then either set a neutral to higher trade once again. Overall, we are not bullish the dollar, but right now it's not out of the realm of possibility with the way the numbers come out this week that we may see some dollar strength coming into play. So I don't see us having a flight to quality rally in the bonds. I do see us potentially, depending on the numbers, having either a big rally or a big slide. Either way it goes, that's going to help set the tone for the US dollar as well as other currencies around the globe. So key off of the high from Friday. This is your risk for you aggressive bears. I would say be careful being short against anywhere above this level. Anywhere above here, momentum is higher move highs and higher move lows. You're going against the trend. So if you're a bearish trader right now in the short run with the euro US dollar, you're going against the trend. You're being contrarian. Make sure you're tight with your risk, and you know where you don't want to be still counter trend trading. So we'll see what happens. There was a big reaction on Friday, a lot of trade. Now we're at the mid-morning already for the US trading. All the foreign markets are closed now for the day, so we'll see how the US reacts, especially off the way the stock market, equity markets are moving right now. So let's go to the British pound US dollar. This is another oil related stock. Remember, we were talking about oil getting to $65 a barrel. Should we see something like that, it is very likely that we will see the British pound make a breakout to the upside. And if it gets above this $1.40, let's get that a little tighter right here on the. If it gets a little higher than this $1.40.10 area, it is most likely going to be making a run to take out this high that was set back at the end of February. So this is not a big area to cross to get from 140.10 or where it's at right now, basically 139.18 to 142.46. Should we see a $4 or $5 barrel rally in oil, it is really likely that we're going to see the British pound skyrocket above 42.46 up to through $1.43 up to probably more like $1.44, $1.45 even in the not too distant future, especially if we start to see oil up in the 70s, which thanks to Sleepy Joe, that's where it's going. Let's see, US dollar CHF. This one's trying to figure out some direction. We had a short-term buy signal in this currency, as well as like we had as far as the US dollar index. This is a bullish engulfing line right here that is now our key variable for strength. So for your aggressive bulls, you want to key off of the low from Friday of around $90.80. And anything below here, we're going to say is back to the bear trend, and you are definitely on the wrong side. Remember, this is a counter trend trade right now, buying the market off the signal, so you got to use caution and make sure your risk is set properly. Now, as far as an upside target, minimalistically looking, we'll just go use a little Fibonacci to give us an arbitrary point, 50% rule. Take this out, make it a little clearer. So if this buy signal is valid, it's likely that we could see a challenge of this 92.78 cents area. If this is just a correction and the trend is definitely bearish and the dollar is weak and becoming weaker over the next few months, then this is the high of what we would see as an upside correction before we see a turn back towards support. So we have to key off of the numbers that come out over the next couple weeks, and especially this week, there's a lot of economic numbers, Like I said, if they stir up the bond market, they're going to stir up the currency market. So we have some short-term signals that are in place going into these numbers. So we'll either get an accelerated follow-through off of these signals, which will help to not just validate them, but let the targets come into fruition. And if not, we know our risk level where the resumption of the current trend, like for instance like this, it's been a bear trend for over a month, making lower move lows, lower move swing highs. That is indicative of a bearish trend, and we are coming off of a recent lower move low. So we'll see what happens. I would say a key level to in the short run, if we get above this 91.86 level for the Swiss, that will give us a good indication that we will still continue higher up to this 92.78 before we see a pause. US dollar JPY, this is impacted by oil as well as gold. So right now we'll see what's going on with this one. This one wants to stall today. You can see how it's a little bit lower on the day. The question is, will it stay there? I think we have to watch the oil market. It's going to be very tough with the oil market flirting with new highs for this market to stay down. The one thing that I think that it's helping the US dollar yen right now would be the we'll go to our Forex Trading Unlocked website, and here we have the workstation page, and we'll pull up a gold chart. So XAUUSD. With gold flirting with an upside breakout here, it's going to be very rough for the Japanese yen. There's going to be a lot of choppiness. So with gold going up and oil going up, this is going to be probably a little bit of a neutral trade. So it looks like we have, I mean, right now we came off this high at the end of March. We set this nice low a couple of weeks ago. This is a higher move high with a higher major swing low. This will be our critical base of support. I do not see us, now if the dollar is super weak, and especially if gold gets a really, really, really big rally, then perhaps we could see this market continue lower. However, I think that with the oil rallying, and especially if gold starts to run out of gas here, so the question is can gold maintain this current upside trend, which, as you see, it's really rounding out a bottom here and basing. This could be just setting a range. Is it going to continue to break out to the upside? We'll see. Today it has not been able to do so. I would key off of this breakout area here and watch out for the spike high. If this runs out of gas, we could see gold spike up to 18 and a quarter, then hit a short-term top and then start to fall apart. If that happens, then watch out for the US dollar yen, because we'll see a big rally. So if gold goes down and oil goes up, we're looking for a challenge of this high that was set in place back at the end of March. And anything above here, we have longer term targets of 113 up to 115 even for the US dollar yen, but that's because we have longer term targets of $75 to $100 ultimately for crude oil in the over the next few months. So we'll see what happens. Obviously, if oil does continue to go and these other commodity driven trends continue to manifest, then it's very likely that this market will continue the trend in the way that it has. Also riding the commodity trend is the Australian dollar, US dollar, a mixed bag of goods. With oil higher, that's a good thing for them. With gold higher, that's a good thing for them. So we'll see what happens. It's kind of choppy right now. I think they're really waiting to see how the economy of both China and the rest of the world start to recover or do not. We do have a lot of inflation in the commodity markets, which is helping to maintain strength for the Australian dollar, US dollar. However, any inklings of a slowdown in production, and especially like if we start to see more tension between the US and China, if we have any type of restrictions that happen as far as production and manufacturing because of it, because of any potential military conflicts that are starting to arise, this would be a big negative for the Australian dollar, because it would shut down their engine as far as production. Because if all of a sudden Chinese starts locking up their trade with the U.S. to some degree, that would influence the Australian dollar. So, but with higher oil and higher gold, we're still kind of neutral to higher for this one. We're waiting for a signal. We don't have one right now. It is a range trader's delight, obviously. New Zealand dollar, U.S. dollar is also a mixed bag of goods. This one is more set in a short-term uptrend, making higher move highs and higher move lows. Will it maintain this posture? We shall see. I think that this one is a little bit more reactionary and free-flowing than the Australian dollar, U.S. dollar. Once that one does start to trend again and get out of its range trading mode that it's in, I think you will see better swing trading opportunities with the New Zealand dollar, U.S. dollar. Now let's look at the U.S. dollar, Canada, another oil-driven currency. This bear market has just continued to erode against the dollar, or the dollar has continued to erode versus the Canadian dollar for well over a year now, making new remove lows on a daily basis over the past 4 sessions, and we'll see if it continues. With oil flirting with the breakout and with gold rallying, it's very likely that this is going to continue. We do have unemployment coming up in both Canada and the U.S. in some capacity, especially if Canadian unemployment comes out much more negative than the U.S., and if the U.S. comes out somewhat flat to positive, you may see a bounce in the U.S. dollar Canada, meaning strength for the U.S. dollar, even if the U.S. dollar is getting beaten up by other currencies. So we don't have the dollar index, which we noticed from the beginning of this video, has a short-term buy signal that was triggered on as of Friday. So will that continue? Is it just a short-term glitch where we had just some profit taking by the dollar bears? Very may well be, but the commodity-driven trade has been really enhancing these trends for the past year, and as long as they are still maintaining their posture, I would say that the trend is your friend, and what has gotten us to where we're at right now, we might as well keep on riding that train. So we don't have any questions out there. So let's go back to the Euro US dollar real quick and see that not much has changed since we started our analysis video today. I think that really for the rest of the day, you're probably not going to see very much more action, especially because we do have these major economic numbers coming in towards the end of the week. We had the Bank of England meeting also. Once again, I don't think that that's going to stir up very much action. The thing that I would key off the most is the crude oil futures. Once again, like these are flirting with the breakout to the upside. Then I would also watch the 30-year bond futures as well. Any breakout to the upside is bearish to dollar. Any continuation of lower trading bond futures would be an indication that dollar strength is coming back. Now, this is something that you really have to pay attention to, because if dollar strength comes back, that means that interest rates are obviously going to be pressing the new lows. Will that happen in the midst of all these auctions? There's a whole turnover in the yield curve going on right now because of all the debt that's being issued, and especially as these new packages start to get unveiled and whether or not they do get passed. So we'll see. We already know there's a lot of restructuring that the Fed has to do as far as refinancing. I mean, we're looking at this year alone, without having added the new relief package that they already signed into law a couple months back, let alone the new one they're talking about adding. We've already just on a refinance basis, we're just under $12 trillion for this year that the open market has to turn over for the U.S. government, and then on top of that, add another couple $1 trillion in debt to pay for all of these basically foreign aid packages masked in the coronavirus bill. So we'll see how this impacts the economy. I'm rolling with the fact that everything that we've been looking at so far has come to fruition. So $100 a barrel oil, as well as much higher interest rates in the 30-year. Right now, it's very possible for the short run, for the next month or two, that we're going to see a little bit of relief, and that's going to put a lot of pressure on the dollar index. So just as we have this buy signal here, I would say we'll see what happens with the numbers this week. After this week, once we start to head into the middle of May, that's when we're going to really know what kind of direction we're going to have. So unemployment is going to be key. A spike in unemployment is going to definitely rock the dollar, and definitely if we have a big sell-off in the 30-year Treasury bonds. If we don't have a sell-off in the Treasury bonds, then we don't have to worry so much. So we'll see how things act out. Right now, today, it's kind of a quiet afternoon, or it's looking to be a quiet afternoon. And we'll see how things manifest this week. But we're going to have a lot of clarity after this week. And that's the beautiful thing about unemployment. It comes out the first Friday of the month, and once that sets its tone, you know where to go for the rest of the month with that, because that's the biggest number that shakes the bond market and the currency market. So we shall see, my friends. So if you have not done so already, please like our video and leave any questions or comments for us to reply to and answer, even questions about any other different currency crosses that you'd like us to bring up in our videos. And also definitely subscribe to our YouTube channel and Twitch channel, Forex Trading Unlocked, and check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions, written by yours truly, Teddy Keckstedt. Thank you.